राजीव इनके मैं चश्मा मोकला हाँ. Good evening, friends. We are starting exactly at 6:30, 6:29. If you go in a train, if you go in a plane, nowadays it is a tendency to start to reach before time. So here today also we follow the same pattern as India's progressed well. So we are in time, we are before time, we are going to walk on time. I am Nitin Pathak, Chartered Accountant, past President of Visakha chapter, and we are continuously working on uh, uh, this CPE, not CPE. CPE means you want some credit somewhere. We are not interested in giving credit. We are interested in giving you the crux of this is a knowledge. Now, according to me, knowledge is also not a power. Power is application of knowledge. For that, we have made a team of our split of our team, which we are working. We are taking different seminar on different subjects. So I had taken a lecture last 2 days before on budget and income tax changes. This is so minutely written. If you download PPT, if you download YouTube presentation, you'll get everything in there written. So everything is there so that you can have a clue over what is there, what is not there. Today, we have Mr. Hiren Pathak. He's a chartered accountant, well-known chartered accountant, very well read. And he's going to talk on the subject of GST and recent changes. And nowadays, our focus would be on GST because GST is going to be the game changer of the country. Because GST collection has crossed all limits. And today, they have not started search. They have not started survey. They have started only the person who was making a bogus bill only. Okay. Once they would start their scrutiny, terminal, and AI. Do you know that they have got AI? They would match with your services. They would match with your bank receipt, and AI would tell the government GST council or GST head. These are the person. If you go, these are the chances that you are going to get it. So once AI come into picture, you would be called upon on the basis of specific information. It would be far, far greater than what you heard in income tax. With this, I tell you, income GST is going to be the game changer, not only for CA community or professional community, but also for a client also. They have to be very much aware what they should do. So let me talk about two things and then hand over the mic to Hiren. First thing, if you do not receive the payment within 6 months of the time of the bill, you need to reverse the credit. If you have made the payment to purchase, but the purchaser has not paid, you need to reverse the GST. There are RCM. There are so many provisions which are simple, but people forget about this. And there are far-reaching changes. I had seen a very professional approach from Hiren Bhai. Hiren is a very powerful person, very knowledgeable, down to earth, young, dynamic. With this, I hand over the charge to Hiren. Any query regarding any GST, please email us. We would support you. We want to support our professor. With this, hand over the charge to Hiren. Thank you very much, Hiren Bhai.
Thank you very much, sir. Good evening to all. Basically, in today's discussion, I have bifurcated my entire presentation into two parts. One is GST changes that is proposed in Union Budget 2023, and second is Some of the recent amendment in GST, which I would think that uh, being a chartered accountant or being a uh, industrialist businessman, you should consider, so that you will be updated with the with where your very well compliant system. So as you are must be aware about the situation that uh, in GST, whenever there is any change that is required in CGST Act or IGST Act, particularly in GST per se, then that is must be approved from GST Council. And whatever changes that has been proposed in union budget in CGST Act and entire SGST Act of all states, that must be passed, and then only that will be come over the effect. So this is only a proposed changes. We and relevant notification would be issued, and then after that will have a role to play. So we will start our discussion. But as far as the related GST changes in the union budgets are concerned, there are not much changes. So I have covered only changes which are very important and covering to majority. I have only considered the same. Whenever the same will be presented in Finance Act, when they will have an effect over the Finance Act, then after we will see the exact changes and exact the implication of such kind of changes. So I start my presentation with first change. First of all, there is a change in input tax credit eligibility with respect to section 17.5. We all know that section 17.5 deals with the block credit. There is a dilemma whether whatever CSR activity you are carrying out, ITC thereon will be eligible or not. Companies Act section 135 talks about mandate certain companies to carry out the CSR activity. And while complying with such kind of CSR activities, business needs to procure certain goods and services. Now question would arise whether I claim the ITC on such kind of CSR activity, because we all know that CSR activity is though in the furtherance of or the business, or that is compulsory by section 135 of the Companies Act. But uh, whether can I claim the ITC because I may build up a school for someone else or for public at a large. I may construct something which is for the public utility. So whether eligibility of that input tax credit is always a question mark. We have certain advanced ruling like Dwarikesh Sugar, which says that such kind of ITC is eligible. However, there are certain advanced ruling also, which says that ITC thereon would not be eligible. So this finance bill clears the ambiguity, and it says that ITC on such CSR activity is not eligible. However, certain hidden points to discuss over here. First, whether this change is prospective or retrospective. Mind well, they have categorically said that this change is prospective and this is not a retrospective change. So one question would arise, whether can I claim the ITC, which is earlier I have not availed, but since the changes has been coming over effect from prospective, can I claim the ITC which is not been claimed? Because one would say that this change is not applicable for the earlier period. Second issue is that uh, section 17.5, the way the finance bill worded this provision, it says that uh, you are incurring certain expense or you are incurring certain activities within the prescribed limit of section 135, let's say 2% of your average net profit. So what if I have incurred certain more uh, expenses towards CSR activity? So to the extent I have crossed the limit, can I claim the ITC on that portion? Let's say suppose for a simple example, I am supposed to have CSR mandate of rupees 1 crore, but I have incurred 1.25 crore. Then can I claim the ITC of balance 25 lakh? So this is also one question. And third, which issue arise? that those companies who are not mandated by such kind of CSR activity, and if they are incurring voluntary such kind of CSR activity, then whether ITC would be eligible to them or not. To answer all these three questions, my view is that with respect to the previous period, you can claim the ITC on CSR expense, because if the intention of the government would be to not allow the ITC from day one, then they would have the carry out these changes retrospectively. So before these changes notify, I think that you can claim the ITC which you have uh, availed on activities of CSR activities before this change is implemented. Second, with respect to ITC which you have incurred beyond the specified limit, in such case, in my view, section 135 says that minimum 2% you need to incur. So even if you incur 2.15%, let's say, then also I think that is also covered within the limit also. Though as to my limited understanding with respect to Companies Act, you can carry forward that balance 50 lakh balance amount which you have incur over and above 2% in the to claim in the subsequent financial year. But since it is also to be covered as CSR component in the next year, I think that even though you incur more than the prescribed limit, then also you cannot claim the input tax credit on the higher portion, that is the beyond the portion which is prescribed under section 135. As far as the companies who are not mandate under section 135 but doing voluntary CSR activity, then I think the way section 17.5 has been worded, I think they can claim the ITC. This is my view with respect to first change. Second change is with respect to exemptions from GST registration. See, this change is, I can say that one of the ambiguity as far as these changes are concerned with respect to GST registration for those entities who are exempt from GST registration, but they are compelled to have compulsory registration by virtue of certain provision. We all know that section 23 deals about person not liable for GST registration. Who are those person? Those person who are purely into exempt supply and agriculturist. These two person are not liable for GST registration because section 23 gives the exemption from GST registration. Section 22 deals with person liable to register. That means the normal person who are crossing the threshold limit in case of a goods, that is 40 lakh, in case of a service, that is 20 lakh. If they cross the limit, then they are supposed to take the GST registration. And similarly, we have section 24 which deals with compulsory GST registration. When let's say when you are incurring certain inward supply which is liable for reverse charge, or you carry out certain interstate supply with certain condition and restriction, then you have to compulsory take a GST registration in such case. Now situation would arise, let's say when a healthcare industry, when a hospital is only providing the exempt supply, however it by certain inward supply which makes them liable to pay GST under reverse charge, then even though such kind of entity is exempt under section 23, but because of section 24, they need to get themselves compulsory registered since they are availing the inward supply which is liable to reverse charge. So in such case, even though the section 23 gives them the exemption, they need to compulsory register themselves, and accordingly, section 23 will have no role to play practically. To avoid such kind of confusion, the clarity has been provided, rather amendment has been prescribed in section 23. By virtue of the same, when the person who is providing exclusively exempt supply, please note that the person who are providing exclusively exempt supply, then they will have a overriding effect over section 22 or 24. So even though Let's take an example. Even though now the hospital who is into the healthcare industry and hence providing only exempt supply, it must not be engaged in supplying the taxable supply. In our example, let's say it is only engaged in healthcare service and accordingly exempt from GST registration. So even though it procures certain inward supply on which they are supposed to pay RCM, then also they are not required to get themselves registered because they are into purely exempt supply. So this is the beneficial provision, I would say, as far as those who are into exempt supply. Now question may arise that generally it is not practically possible that anyone who deals with such kind of exempt supply would not have any taxable supply at all. It may possible that hospital may sell out certain scrap. So on that scrap, they need to get themselves registered because they need to pay tax because that is covered under the taxable supply. And by virtue of section 22, when you are providing exempt supply and taxable supply both, then once you cross your threshold limit, you need to get yourself registered. Now it may possible that uh, when a hospital supplies certain scrap and it is having a GST applicability, that is a taxable supply, taxable outward supply, then can I say that it is also engaged in providing the taxable supply? Yes, it is engaged in providing the taxable supply, but however, the way section 23 has been worded, it is not in the business of supplying that taxable supply. So what is important here is that the registered person should be in the business of supplying the exempt supply. So in our case, the hospital is not in the business of supplying the scrap, and hence it, even though the tax scrap has been supplied by the hospital, still the section 23 exemption will prevail. This is our view on proposed changes with respect to exemption for GST registration. Till now, we all know that even though we are filing various GST returns late, then at the max, we are supposed to pay late fee or interest as the case may be. However, there is no maximum cap by which such kind of returns can be filed. To assure the timely compliance from the registered taxpayer, the government has introduced one proposed changes which says that in case of a GSTR 1, GSTR 3B, GSTR 9 and GSTR 7, maximum time limit by which you need to file such kind of return is 3 years from the applicable due date. So this is the amendment prescribing the maximum timeline for filing various GST returns. Generally, with respect to 1, 3B and 7, it would not be a possible, or it would not be any much concern. But as far as GSTR 9 is concerned, I want to have one point of food for thoughts for discussion over here, that GSTR 9 is supposed to be filed when your aggregate threshold, aggregate turnover is crossing, annual aggregate turnover is crossing rupees 2 crores. It may possible that while counting this aggregate annual turnover, you have not considered certain supplies which in your view it may not be covered under the supply, let's say non-taxable or exempt supply, and accordingly you have not filed your GSTR 9 thinking that you are not supposed to file GSTR 9 because your aggregate turnover is below 2 crores. But when the assessment comes, or when the departmental authority assesses the audit, or when they come for the audit, and they have identified that you have to count certain supplies in the outward supplies, and accordingly your aggregate turnover increased 2 crores and you are supposed to file GSTR 9, then if the timeline of 3 years has been expired, then in that case you don't have any other option but to forgo that GSTR 9. If this limit would not be there, then it may possible that why in case you identified certain error later on, then you can file GSTR 9. But after this amendment, if the 3 years has been passed from the due date, then you cannot file your GSTR 9. Similar, one of the major amendment I would say as far as the union budget indirect tax proposals are concerned, we all know that whenever the person is supplying exempt supply together with the taxable supplies, then as per rule 42 and 43, they need to reverse the proportionate ITC. Exempt supply, the scope of exempt supply has been increased in such case by virtue of this amendment. It says that now the exempt supply also includes certain specified transaction in respect of supply of warehouse goods to any person before the clearance to home consumption. We all know that schedule 3 covers this kind of entry, and whenever any person imports certain goods, store the goods in the warehouse, custom bonded warehouse, and before clearing the same for the home consumption, they handed over the goods to some another buyer, and who will ultimately file the bill of entry, and the person who is filing the bill of entry is supposed to pay tax on it. So those the person who has imported such kind of goods and sold the goods before clearance to the home consumption, for them such kind of supply is considered as a no supply because it is covered under schedule 3. However, the proposed amendment in such case covers that as far as the entry 8A of that schedule number is concerned, that is the supply of warehouse goods to any person before clearance to home consumption. In such case, government will specify certain kind of a transaction. Please note that it is not the complete entry which is covered under the exempt supply, but government will specify certain transactions in with respect to supply of warehouse goods to any person before clearance for home consumption, and such kind of transactions would now be covered under the exempt supplies. The moment your such kind of transaction is covered under the exempt supply, the ratio of exempt supply to taxable supply will increase, and accordingly your ITC reversal as per rule 42 or 43 as the case may be would also increase. How, and together with that, we all know that the high C sale is also covered under that entry. However, as far as the high C sale is concerned, the similar provision is not applicable, and high C sale will continue to be on no supply together with that custom warehousing sale, and ITC reversal on that high C sale is not required. Only ITC reversal is required for warehousing sale only. We all know that uh, there is a vast increase as far as the e-commerce operator sales are concerned, and that is gradually increasing. And as per the earlier GST Council recommendation, composition dealer are also proposed to be included to carry out their sales from e-commerce operator. So this is the welcome amendment for the small dealers who are having the composition scheme, who are covered under the composition scheme. Now such kind of composition dealer will be allowed to carry out their supply of goods from e-commerce operator. However, 2 points here to note that they can only carry out intrastate supply. Interstate supply is not permissible, and they can only carry out the supply of goods only. Composition dealer for supplying composition dealer who is supplying the service is not covered by above clause. We all know that as Nitin sir is also discussing, that government is having the ample amount of data, and they are having the ample amount of data which they are using to issue various kind of notices. And there is a they we all know that various notices has been received by interlinking the data, that is the data available on the income tax portal and data that is available on GST portal. And while comparing between these two data, they are gathering the details and asking the deviation reason for the taxpayer. So similar amendment has been proposed that government will exchange the information based on the data that is available to them by whatever means. Let's say they might get the data why, because you have filed your GSTR 3B at GSTR 1 or annual return, or you might have furnished the data at the time of GST registration. The government will give the government will take the prior approval from the concerned supplier before sharing the details, and government can, after obtaining the approval, government can share the data. However, please note that the similar the very particular wording has been mentioned in that amendment, that supplier cannot sue the government for any loss that happened to the supplier due to this sharing of the data. So this way also we would see in future that many many information will be shared from the government to various authorities, and we will have to have many kind of reconciliation to compare various details between two tax statutes. There is one IGST amendment. We all know that section 12(8) deals about the place of supply in respect of the transportation of goods outside India. To determine the place of supply in case of a transportation of goods outside India, earlier I would take you to the earlier amendment. You must have know that when the particular transporter is, let's say, in a Gujarat, and supplier of goods is also in a Gujarat, however you want the transporter to supply your goods to USA, then based on section 12(8), transportation of goods outside India, the place of supply in such case would be the destination of the goods. And since uh, you are moving your goods from India to outside India, the place of supply in such case would be the outside India. Question arose last 4 or 5 months before, and clarification has been issued in that case also, that when the place of supply in such kind of transaction would be outside India, then whether the supplier would be eligible to claim the credit or not, because the place of supply would be not the registered location, registered state, but that is outside India. And clarification has been issued that ITC would be always available. However, even after that clarification, the proviso by which the place of supply would remain outside India, the proviso itself would be deleted, and based on this amendment. And after deleting that proviso, what will be the change? In the same example, your supplier's location would be the place of supply, and accordingly, the similar transaction, they will charge CGST and SGST and not IGST. So this is the change as far as the cross-border transaction are concerned. There are no much amendment as far as the union budget is concerned. Majorly applicable to all those amendments we have already discussed. We are now moving to discuss certain recent amendment that has been issued, which I think that you might find it useful. We got many calls from the our client that their GST registration got suspended because they have not filed GST returns. We will see in subsequent slide that when the GST registration can be suspended if you have not filed your GST or return for particular months continuously. Then the what would be the scenario in such case? That earlier there was no online process to restore the GST registration. Whenever your registration has been suspended, you all know that in case you have not filed your GST returns, your GST registration will be suspended but not cancelled, and you will be given an opportunity to file your GST return and get your registration active. So when your registration got suspended, and in that stage you are given an opportunity to file your GST returns, you are supposed to file your GST return. When you file your GST returns, you can active your GST registration by following the online process only, and you can initiate the drop proceeding as per the slide given here. Earlier, before this provision, you need to approach to the authority for revocation of registration, or to make your registration active. However, it would take certain time, because even after you have filed your GST return, they will scrutinize the same. And to avoid that time gap, the online process has been prescribed here, that once you file your GST returns, you can get your GST registration active by following the same process. nowadays we all know that there are many notices has been issued with respect to ITC comparison. When you avail the ITC that is available in GSTR 3B, but uh, officer will ask whether the same is reflected in respective GSTR 2A or 2B or not. And if the same is not reflected in GSTR 2A and 2B, then they will ask you to reverse the same. We got many ASMT 10 with respect to such issue. And because of the initial period of GST inception, particularly for financial year 17, 18 and 18, 19, the circular has been issued in such case. What the circular is saying all about, it says that as far as your financial year 17, 18 and 18, 19 is concerned, what you have to check, that first you have to check whether your supplier has filed the GSTR 3B or not. I am talking about the case when you have availed the ITC from particular supplier, but ITC from that supplier is not available in your GSTR 2A. Then what you have to do? First, you have to check whether that supplier has filed his GSTR 3B or not. And together with that, why the same ITC has not been reflected in your GSTR 2A? Because of the reason that first, your supplier might not have filed their GSTR 1, or your supplier has filed GSTR 1, but he has mentioned the GST number of the another party or another customer, or supplier might forgot to add the invoice in his GSTR 1 at all. So in all these three cases, it may possible that uh, your GSTR 2A does not contain the invoice from that supplier. So in such kind of scenario, you have to check whether particularly ITC difference with respect to that supplier in a financial year is crossing more than 5 lakh rupees or it is less than 5 lakh rupees. If the ITC different with respect to that particular supplier is more than 5 lakh rupees, then you need to take the particular certificate from chartered accountant or a cost accountant. And if that is difference between the ITC in GSTR 3B and GSTR 2A for one particular supplier in a financial year is less than 5 lakh rupees, then you need to take the certificate from the supplier itself. And what that certificate is saying all about, it says that the certificate should contain that the input tax credit shall be available because you have fulfilled all the condition. And what particularly that certificate should indicate that supplier has supplied to recipient and tax thereon has been paid by the supplier. This certification is required either from a chartered accountant or supplier, as the case may be, depending on the quantum of the ITC difference. This is all that circular is talking about. So in your case, even let's say you have received ASMT 10 with respect to that ITC difference, then you can take the benefit of this circular. There is one case law in case of Karnataka High Court in case of a Wipro Limited held that even though this circular is talking about 17, 18 and 18, 19, still you can claim you can have the benefit in financial year 1920 also with respect to this change. This is the decision of the Karnataka High Court. Obviously the authority will not accept in Gujarat the stand taken by the Karnataka High Court, but you can very well take the benefit of this High Court decision and submit your reply accordingly. Sir, I can see there are questions, but let me finish my discussion. It will not take much time. We will have a question answer at the end so that I can cover the entire presentation in time. Uh, we all know that there are various GST fake invoicing is also happening, and which hampers the GST collection. Uh, there are various scenarios under which the GST supplier has obtained GST registration by issuing the fake documents, and they have created an entity, and just because of the circulation of the invoice, the ITC has been passed on, but the ultimate tax payment has not been made to government. to strengthen the to make the to make the GST registration more effective, they have circulated various procedural changes as far as the GST registration process is concerned, particularly for Gujarat state. As far as the Gujarat state is concerned, it says that you have to upload the invoice, or you have to upload the documents at the time of GST registration, but they will also manually verify the document that you have uploaded. Further, Aadhaar authentication process will also be carried out biometric instead of the OTP, and they will take the live photograph instead of the online uploading. And in case they identified that the taxpayer is a risky taxpayer based on their data analysis, then they will carry out the physical verification. So such kind of process is only applicable to Gujarat state and not to the another state, to other states. And as far as the other states are concerned, there is one chain that we all know, that authorized signatory details we need to provide, and in that you need to provide the email ID and mobile number. It may possible that authorized person is from your office only, and I mean, you are providing the email ID and mobile number of some person in case of a authorized signatory from your office only, and authorized person cannot be called upon as and when required in case that person is not available to whom the mobile number has been issued. So to remove this issue and to mitigate this issue, they have mentioned that in case authorized person detail, they will fetch the data of email ID and mobile number from the PAN database only. So they will fetch the data from the income tax department. You just need to provide the PAN number of that authorized person. Rest they will fetch from income tax department only. So this is what we were just discussing about the alignment of the various department. We all know that sir has also discussed that in case you are not paying to your supplier within 180 days, then proportionate ITC you need to reverse. Now the question may arise, there are multiple changes in fact in budget 2023 also suitable amendment has been made in section 16(2) to align this provision with respect to the present act. We all know that if I give the history, this provision is since day one, right? Since inception, this provision is there that in case you are not paying to your supplier within 180 days, you need to reverse the ITC. However, we all know that the original system of return filing would be GSTR 1, GSTR 2, and GSTR 3, which is not coming into existence since day one. However, when any additional liability that you need to pay, then you have to add that additional liability in GSTR 2 with respect to this ITC reversal as per the original proposed return filing mechanism. However, GSTR 2 will never come into picture since day one. So, but the wording has been worded in such a way that you need to add as output tax liability. Now, if I go to the summary part of this provision, it says that you have to reverse the ITC when you are not paying to your supplier. Earlier also, when the similar changes has been made, the proportionate ITC word has been removed. We all know that if I am availing certain goods from my supplier, let's say of rupees 10 lakh rupees, and on that, let's say 1 lakh rupees ITC is there, so I need to pay them 11 lakh rupees. If I have not paid them 11 lakh rupees, to the extent of payment, I need to reverse the ITC. To the extent of unpaid amount, I need to reverse the ITC if 180 days has been crossed. Since the proportionate word has been removed, the question may arise whether even if I am failing to pay, let's say only some portion of the amount, be it a taxable value or a tax, do I need to reverse the complete ITC? The clarification has been made that it is not so. You need to only reverse the proportionate ITC, and that no payment also includes the proportionate payment also. As far as the interest liability is concerned, it has been mentioned that interest will be applicable as per section 50. Now, in my view, since this is a ITC, the interest as per section 53 would be applicable, and interest would only applicable if you avail the ITC and utilize also. If you have availed the ITC but not utilize, then interest would not be applied in such case. Okay, so we are used to check GSTR 2B and then claim the ITC in our GSTR 3B. However, we all know that GSTR 2B ITC is only because the supplier has filed his GSTR 1. However, government wants the payment from the supplier only, then only you will be allowed to claim the input tax credit in your GSTR 3B. So it may possible that supplier has filed his GSTR 1 but not GSTR 3B. Then since he has filed his GSTR 1, the due credit has been reflected in GSTR 2B and you can claim the input tax credit. But what about the tax payment to the supplier? Even that condition is also there in the parent section of section 16 only. So for that, new rule 37A has been introduced. I have prepared the simple way to understand that provision. You need to check first that whether your supplier has filed his GSTR 1 and accordingly your GSTR 2B has been updated with the ITC. Yes, then you can claim the ITC. Then you need to check whether your supplier has filed GSTR 3B or not till September of the next financial year to which that ITC belongs. If your supplier has not filed his GSTR 3B, then you need to reverse the availed ITC by November of the next financial year. If you have not reversed the ITC by November, then you need to reverse along with the interest. Anyway, whenever you are reversing the ITC, interest would be applicable, though there is a dilemma with if you go by the plain reading of new rule 37A, it seems that if you reverse the ITC by November, then no interest would apply. However, harmonious reading of section 50 read with rule 37A says that even if you are reversing the ITC because your supplier has not filed your their GSTR 3B, interest would apply if you have utilized such kind of ITC. So in nutshell, new rule 37A has been introduced, wherein you need to check not only GSTR 2B but filing status of GSTR 3B of your supplier also. There is one changes with respect to the RCM, and there was very hue and cry with respect to the residential immovable property that is being rented out. So to understand this provision in a simple language, I have prepared this chart. You can go through this chart. I will share the presentation. It only talks about whenever you are having the residential property and you are renting out the residential property to the registered person, then that registered person need to pay RCM on it. But if the same residential property has been rented out to unregistered person, then tax is not supposed to be levied because that is a exempt supply. However, in case of a commercial property, always that is taxable under forward charge. There was a debate and discussion over the point when I am a proprietor, I am availing a residential property, but I am not availing that residential property on rent as a proprietorship concern, but I am availing that residential property on rent and in my personal capacity. Then what would be the scenario? Do I need to pay reverse charge even though I am availing the same in my personal capacity? Then it has been clarified that if you are not availing that renting facility in a excuse me, hello. Okay, so if you are not availing if you are not availing the residential property on a rent on a as a proprietorship concern, but you are availing that in an individual capacity, then that is exempt. So this was the clarification that has been issued. Kindly consider the same. Certain compliance related changes you must be knowing, but for the sake of your refresher, I'm sharing that whenever you are you or your client is engaged into a job work job work activity, then you need to file ITC 04. Earlier, the ITC 04 needs to be filed quarterly. Now there has been change with respect to that return ITC 04 filing mechanism. Whenever previous year turnover is more than 5 crores, then you need to file half yearly. And if your turnover is less than 5 crore, then you need to file it yearly only. There are one changes with respect to GSTR 3B, which is very constant since last 5 years. And they have introduced one changes. Uh, uh, Only the most important change that I will discuss. We used to report ineligible ITC under section 17(5) in GSTR 3B. However, that ineligible ITC would only a disclosure part and not the calculation part. Now the ITC portion of that GSTR 3B has been changed. If you can see that table number 4B1 and 4B2 has been changed. 4B1, it's talk about the permanent ITC reversal, and 4B2 talks about the temporary ITC reversal. You need to claim and report the ineligible ITC in the table of all other ITC, and then you need to reverse the ITC as the case may be. If that ITC is permanent in nature, then you need to report under 4B1. And if that is a temporary nature, then you need to report under 4B2. In nutshell, I will tell you why the changes is why these changes has been introduced. Because you are comparing your all other ITC with GSTR 2A. Ineligible ITC is also auto-populating in GSTR 2A. If you not add your ineligible ITC in all other ITC, then always your GSTR 2A will be on a higher side. And that will that will be loopholes when the departmental authority will see that, because they will see that always your GSTR 2A is on a higher side, so you have claimed the less ITC. But it is not the always case. You might have availed huge ITC on, let's say you have procured the Mercedes, and that credit thereon is ineligible, but you have not availed the same while filing your GSTR 3B return. So when you compare your GSTR 3B and GSTR 2A, your GSTR 2A will always be on a higher side. So in now, what will be the change? Whenever you are claiming, whenever you are having any ineligible ITC, you need to avail that ITC and you need to parallelly reverse that ITC, so that availed ITC portion will be compared with GSTR 2A, and exact picture of the ITC difference would be analyzed from that. So this is the change that you need to carry out. Actually, this change has been come from August 2022 itself. However, we can see that many clients are not following the same. And government is also insisting and throwing the mail that you need to file your GSTR 3B as per the updated system. With respect to the last year changes, particularly 3 changes. First, changes with respect to availment of the ITC, rather last date to avail the ITC. Second change with respect to issuing of a GST credit note. And third change with respect to any amendment or modification in your GSTR 1. We all know that for all these 3 changes, the last date was the due date of filing September month GSTR 3B return, or filing of the annual return, whichever is earlier. Now they have changed the upper part, that is the last date, due date of filing GSTR 3B of for the month of September. Instead of that, now they have mentioned that cutoff date as 30th November only. So with respect to financial year 22-23, you can avail the input tax credit up to 30th November 2023, or filing of annual return for financial year 22-23, whichever is earlier. Similar has been applied for issuing the credit note with respect to financial year 22-23, and with respect to any changes in GSTR 1 with respect to financial year 22-23. And one of the last slide that I would like to discuss, that there is a change in inverted rated refund formula. Many of you must be knowing, but still I can see that uh, people filing inverted rated refund, they still calculating their refund based on the old formula only. I'm not going into the what is the formula and what is the new formula mechanism, but I would change the principally. The change is with respect to direction by the Gujarat High Court in case of a VKC footwear, that it says that whenever you are reducing the tax payable on inverted rated supply, you also parallelly need to consider the ITC that is available on input service also. Though after these changes also, ITC on capital goods and ITC on input service would remain ineligible for claiming the refund. However, in case you have a ITC on input service, then tax payable from the eligible refund would be less, and accordingly your refund would be higher. I will share this slide. I will share this formula also. You can recalculate your refund based for this inverted rated structure, and accordingly you can see that there is an increase in your refund if you apply a new formula. Uh, we are also receiving many calls with respect to that detention of the vehicle with respect to wrong e-way bill prepared, or there is an error while preparing the e-way bill. So I have included this slide. It is nothing new change, but you can see that if you go to the hierarchy, you will find many high court decision in favor of SSC only, even though there is a minor error in e-way bill while preparing the e-way bill. The goods had been detained and you need to pay 200% penalty, and then only your vehicle will be released. For such kind of cases, if your case is also such kind, then you can have shelter of this circular 64, which says that there are certain error like spelling mistake in the name, or there are minor error in punching the address or HSN by any last two digit, or there is any pin code error. Then in such kind of situation, you are not supposed to you are not supposed to initiate the proceeding for detention of this vehicle. Rather, you only need to pay the minor penalty and your vehicle will be released. Similarly, you can have the n number of judgment, like recently the Allahabad High Court in case of a modern trade has held that if your e-way bill has been generated after the inception but before the detection, then only penalty would not be applicable, because before detention e-way bill has been duly generated. Please note that we as of now we don't have any other option but to go for an appeal if your penalty has been wrongly paid. And uh, for those cases, I would also like to draw your attention to the option that instead of paying the penalty in cash, you can have the bank guarantee also, and your vehicle can be released on such ground. On the last slide, certain points that you should consider based on the recent litigation and recent compliance deviation. Uh, First, you have to check your portal. You go to login and you check the portal of your or your client that many of the notices has been issued over there. We are not knowing about the same, and time limit has been expired, and then we don't have any other option but accept to appeal. So mode of serving of the notice on GST portal is also valid mode of serving the notice. So you have to consider that part also. Rule 86B violation is also there. We can see that there are many notices has been issued because you have not paid any amount of your tax in cash, and you are utilizing your 100% tax liability through ITC only. You can see that rule 86, they have certain exception also, like your any two partner or director must have paid income tax of rupees 1 lakh or more, or you might have received your GST refund. Certain exceptions are there. If you are not falling into exception, then make sure that you comply with rule 86 and you need to pay 1% of your tax liability in cash. Similarly, we all know that since nowadays we are matching your GSTR 3B with GSTR 2B, and such kind of mismatch ITC we are carrying forwarding. However, as per the law, you cannot carry forward your ITC as those remain mismatch. And since your supplier has not filed their GST returns within time, then you cannot claim the ITC beyond certain period of time. So you need to check the aging of such kind of carry forward ITC. Those ITC which belongs to the earlier period for which your supplier cannot file their GSTR1, or there is a cutoff date also when you go for a annual return filing, table number 8A particularly, you must be knowing that they have provided the cutoff date. Beyond that cutoff date, you cannot claim the ITC. So instead of carrying forwarding and accumulating the ITC balance, better to expense it off. You need to check on a case to case basis. Similarly, reconciliation is always an ongoing exercise when you are dealing with GST, be it a GSTR 3B or GSTR 1, or uh, uh, there are various other reconciliation nowadays like e-invoicing versus e-way bill generated, or the tax invoice, that is data as per your books of account and data as per the GST portal, that you need to check. And in case your ITC is getting accumulated, that is also we are identifying in various cases that you need to check whether uh, do you have any export composition as far as your output tax liability is concerned. And if you have any export related composition as far as your tax liabilities are your outward supplies are concerned, then you can very well take the refund for the same. And if your stock is also increasing gradually, then also there it may be a case that your ITC gets accumulated in such kind of a cases. Uh, Notice has been issued in ASMT 10 in such kind of cases, that what is the reason for such kind of ITC accumulation. You need to get ready with the answer so that you can have the ample reply for the same. So that is all from my side. I have covered the some of the recent and important aspect. Now I am open the query session. Those who have a question can ask for the same. Thank you very much.
Thank you very much. Now you can unmute themselves and ask the question, and you can send me on chat message also, or you can tell me uh, anyone has a question, or this is our number, hiren@cmsha.com, and our mobile number is 9033655245. You can just WhatsApp me, and we would give you a detailed answer. We are ready to share the knowledge. We are ready to guide you in this thing. And most of our deliberation is by professional only. And today, those who are not working on this field as a CA practice, they thought that it is very tough. Here and I assure you, it is easier than income tax practice. But only thing, you have to read, you have to focus, guide, and it is not a rocket science. Okay. So I again ask anyone who have a query, do not bother to ask us. Just email us. Just WhatsApp us. We would, when you pick up the phone, you are very not clear what you exactly your query is. Jot down the query, email us, WhatsApp us. We would positively come and revert to you. This is our email ID, hiren@cmsa.com. 9033655245 is our WhatsApp number. Anyone I can unmute, and right now I can ask a question. You can unmute yourself. Uh, okay. This presentation, we would put it on YouTube. PPT would be available on blog. Presentation would be available on blog. Our aim is to promote our fraternity and take you to a different level. Okay. Uh, we are going to, we and Hiren are going to run a series on every 15 days. You can ask the query, we shall be obliged. If you find a subject very tough, come and ask us. Okay. And as the CA Nitin Pathak blogspot.com, we are going to present in YouTube and PPT also. And nowadays, I think my income tax presentation is also available on YouTube with PPT also, where everything is crystal clear. In the years to come, people would say that income tax practice नहीं करनी है, मुझे GST की practice करनी है. This would be the time of a day. And with this, we are closing the session very soon. With again last word, this PPT would be also available on blog. And once more, just jot down our email ID. What's good night? Just jot down our email ID, WhatsApp number. Thank you very much. Thank you once again. After 15, this is a Friday. Today is a Friday. Next Friday we will again talk on the subject of GST. We would have some clear idea on some subject, which would be detailed, be explained. And anybody wants to have a detailed knowledge. In my blog, I have written, I have a slide about only a construction activity. Like everything is like joint development agreements, everything is in PPT and YouTube. PPT as well as like सोसाइटी में जीएसटी क्या होता है, जीएसटी का कंस्ट्रक्शन एक्टिविटी में किसको सब कॉन्ट्रैक्ट बोलते हैं, how GST in joint development, there are joint development agreement, what should be the check proportion, when it should be taxed, everything is detailedly explained. And anyone have an issue regarding any specific industry, please come to us. With this, we are closing this session. Thank you very much. See you once again.